So now is a time, as like Jake likes to say, to prepare for winter. If you're a Game of Thrones fan, winter's coming. I don't know how long it's going to take to get here, but it'll get here. So start learning what your buy right criteria is. Start getting your investors lined up. Start learning your pitch. Start talking to real estate brokers. Start networking and start getting your business in order, because the opportunities will come before you know it.
Hello, everybody. Jake and Gino here, and today we're discussing why we believe right now, today, in 2023, why this is the best time that we've seen over the past 5 years to be investing in multifamily apartments. It all goes back to the Buffett, the famous Warren Buffett. Be fearful when others are greedy, and be greedy when others are fearful. So, what are we saying? 2021 to 2022. Everybody's flush with cash. Interest rates are low, and all the investors are coming out of the woodwork, overpaying for apartment complexes. Fast forward to 2023, where we are right now. Rates have doubled. The cash is dried up. Now there's deals to be had. So you think, well, this seems like a pretty good time if I want to buy apartments because the deals are getting cheaper. But you know what the funniest thing is, Gino, and almost the saddest thing? I see probably, there would be 20 people. I mean, I don't know. Like, if you're seeing a deal right now, half to a quarter investors are actually participating, trying to buy deals right now. So all of these people that were out there trying to buy deals, when everyone else was trying to buy deals, competing with each other in this red ocean, they've all gone away. So you're seeing maybe a quarter of the investors that you saw from a year ago, but they're gone. And they know that this is a better time because asset prices have come down. So everyone can recite the quotes from Buffett, but the hard truth is that the majority of us will say one thing and do another, and then they will follow the crowd into investment mediocrity. This is the time, Gino, where we say lions, not sheep. And I'm very happy to have brought you on today to break this down for us, sir. Volley to you.
That was a long ass intro, but I really liked it because it really laid out what's been going on for the last few years. And if you're new to the Jake and Gino channel, what I want you to do is to subscribe to the channel. We have 4 weekly shows pumping out tons of content. So go down below, click on that subscribe button. And also let me know what you think of Jake's intro. Put a comment in that comment section. Say, hey, Jake, you're long-winded. Jake, you hit it on the head.
5 stars or we're kicking you out.
I've been investing with Jake for the last 15 years. We've had our ups, we've had our downs, and I know the sentiment right now. It's going back into when we started, and it's a scary time. There's a recession coming. People are losing their jobs. Everything you hear on the news is negative. And to me, right now, I want to give a big shout out to Sam Zell because he really epitomized the contrarian investor. And he passed away this past week at 81 years of age. He was an immigrant. I think his parents escaped Poland during World War II, and they came over here. They worked their asses off in Chicago. And his whole mantra was, he was the grave dancer. He basically bought stuff when stuff was on sale. And I don't even know if he bought any deals in the last few years. He must have been looking at stuff and going, wait, you have investors buying assets that are stable on bridge debt? He's been through 15 cycles. He must have been scratching his head and saying, what is going on here? Like, this is insanity. And I look back at him and I've seen what he's accomplished. He's a huge philanthropist as well. Not only did he make tons of money, he gave tons of money away. But what I liked about his philosophy in real estate was, hey, listen, play the cycle. And that's what Jake is saying right now. Right now, interest rates are going up. If you can find a deal that pencils out right now, we know rates are going to have to come down because once we go into that recession to stimulate the economy, they always drop rates. Now, I'm not saying to you, hey, buy it if it's marginal right now.
Don't overpay. We're not saying overpay. That's very clear. That's right.
Yes. So buy the deal that makes sense right now. But what do you need before that? You need to work with a group. You need to work with a mentorship. You need to work with a mentor who can teach you how to buy deals, the buy right criteria. Yep. What kind of deals are you buying? How do you underwrite deals? And I'm only sharing this with you because I've been through the pain of a couple of market cycles before I met Jake that I didn't know any of this. I had action equals results. I was missing that education. A lot of people out there have the education. They don't take the action. The action comes from joining communities and having accountability partners. I had the action. I didn't have the education. You need to put both of those together to be able to get the results.
So what's the formula, Gino? You're giving the breakdown, but what is the formula here?
It's education times action equals results. And I'm going to tell you right now, a lot of the students in the academy right now they're drooling because they've joined 3 and 4 years ago. They're like, man, deals aren't penciling out. They keep sending deals to the coaches, and the coaches are like, this deal ain't working, this deal ain't working. They're like, am I doing something wrong here? No, you're doing something right, because no deal is better than a bad deal. But now we're starting to see deals that make a little bit of sense. We're starting to see deals like, you know what? A year ago, that would have been 110 a door. Now it's 90 a door. It's still got to go down a little bit more. And I think asset prices will continue to go downward. You have all the experts out there saying, hey, asset prices aren't going to go anywhere. You know, let's see what happens when we get into a hard recession, when there's a lot of that money is not in the market anymore, when lenders aren't out there lending. That's happened before, and it's going to come again. So now is the time, as like Jake likes to say, to prepare for winter. If you're a Game of Thrones fan, winter's coming. I don't know how long it's going to take to get here, but it'll get here. So start learning what your buy right criteria is. Start getting your investors lined up. Start learning your pitch. Start talking to real estate brokers. Start networking and start getting your business in order, because the opportunities will come before you know it.
Yeah, and I want to get very specific on something that Gino just said. If you buy a deal now, typically we like to buy deals, renovate them. Some may be small renovations where it's a few touches, management plays. Some may be larger, but it takes time. Multifamily is a long game. So if you buy a deal now, yes, the rates are going to be elevated, but over the next 2 years, while you're renovating that deal, you can use a community bank, you can use a credit union, do a couple of years of interest only on your deal with loan to cost, meaning that they'll actually loan the renovation. By the end of that 2 or 3 year period, we think that rates are going to come down. We may be wrong, but either way, you're going to be able to refi that deal to agency, which is going to be better than the community bank or bridge debt. Still both fixed rate, minimum 5 year term deals. And then all of a sudden we're saying, okay, so I bought it. The rate was higher. If things go as planned, 2 to 3 years now, rates will come down. You can refi it. The deal will be performing better at a lower interest rate. Now we're partying. Now we're playing air guitar. This is Nirvana. And I'm not talking about the band, okay? I'm talking about the state, all right? So there's a real cool opportunity here that I think is going to play out, and that's why we're so excited. Look, I don't know how many units we closed this year. We've already closed 128. I'd love to close the year 300 to 500 units, and I think there's a real chance for that because where the pricing's at.
So, Jake, I think anyone listening to this right now, what you need to do is you need to start really getting crystal clear on what you're focusing on, what your target is. And I think for us, the first thing to do is to create a buy right criteria. What kind of assets are you buying? First of all, select the market. That's the most important thing. Don't be out there if you're a beginning investor trying to pick 5 or 6 markets. Try to hone in on one, tops 2. Become an expert in that market. Learn who all the brokers are in that market. Opt into offering memorandums. Get deals out over your desk. The next thing is become a really good underwriter. Understand the numbers. Understand what you're trying to accomplish. And then your buy right criteria. What's the vintage, the age, the number of units, the unit mix, the median income, all the stuff that we teach our students, becoming crystal clear. And then all of a sudden, you start reaching out to brokers, start doing property tours. Those opportunities will come. You know, Jake, I was on a call yesterday with the broker, Ramel, big shout out in Jacksonville. Got on a call with him yesterday, and it was an awesome 20-minute call. We just met, introduced each other. He was asking us about what our criteria was. I told him what we're looking for. Crystal clear. He says, when I get a deal, reach out. I'll send it to your inbox. Start doing that. Let the brokers know what you're looking for so they have an idea when a deal comes across the table. Usually a lot of these deals are pre-market or off-market. They'll send it to you. Be proactive in this part of the market cycle. Don't be afraid of all the negative news out there.
Yeah, and we're long-term multifamily investors. We don't want to buy a deal, flip it in a year or two. Okay, we want to let these things pay us, let that snowball of cash flow build up for a long time. That's why I'm the most excited I've been right now since 2018. And I am about buying and growing our portfolio. I'm the most excited I've been since 2018. So to recap, guys, what we're saying is the best time from a pricing perspective to buy deals right now. You're going to get the best pricing. Wait for your pitch. There's a lot of also, people trying to sell deals that they got, kind of hung up on that are not good. So wait for the right deal. You do that by working with somebody, working with a mentor that has good buying criteria. You set up good buying criteria in terms of the vintage, in terms of, the location, all the stuff that goes along with having good buying criteria, and then look for a nice refi in the next 2 to 3 years, push it off from that point onto agency, long-term fixed rate, non-recourse debt, and play the long game. That's what we're saying here. It's not a get rich quick, but if you stack assets in multifamily, you can do very, very well financially. Gino,
It's one cycle. Yeah. All you need is one cycle. All you need is the next 3 to 5 years. You continue to put in offers and buy deals. Within the next 3 to 5 years, you're going to look back and go, wow, I'm glad I started when everyone else was running towards the exits. I want you all to go to jakeandgino.com/webinar. Sign up for our monthly webinar. Jake and I get on every month. It's usually the third or fourth Tuesday of the month at 8 p.m. We go live. We typically have about 200 to 250 people on there. Last month, we did property management pitfalls. Every month, it's a new topic. So go on the jakeandgino.com/webinar. Sign up for next month's webinar. You can watch the previous months as well.
Hey, it's multifamily gold, folks, guaranteed. So, as always, gang, we believe in buying deals for the long term. Think in decades. I'm Jake. He is the G Daddy making it happen today, and we will see you next time.